Good morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. It's another Monday morning. Markets are kind of flat. Let's talk about the equity markets. A few pretty interesting things going on. Basically, all sectors, all indices are hitting new highs. Market is in a confirmed uptrend. There is a big however, and we'll get to that big however right away. But if we look at the Dow Jones Transports, they're at new highs. We look at the consumer discretionary stocks, the XLY, they're at new highs. You look at the technology stocks, XLK, they're at new highs. We see the financials improving. They're just about at new highs. They're right there. If you look at the XLF, you see the home builders, it's been a lagging group coming off, trying to fight its way off the bottom. You see the industrials, the XLI hitting new highs. You see the materials sector, XLB hitting new highs. The NASDAQ hit a new high last week. The S&P 500 hit a new high. The Russell 2000 hit a new high. The mid-cap 400 hit a new high. The S&P 600 small caps hit a new high. So what's not to like in this market? We've got to be a little bit careful and take a look what's going on. These indices that are hitting new high, they might be masking what's really going on underneath the hood a little bit. And what I mean by that is the leading stocks on the NASDAQ aren't doing that well. In fact, we're seeing some stalling on the NASDAQ. We had a distribution day, I believe it was last Tuesday or Wednesday on the NASDAQ. That was a day of heavier volume selling and the market traded down. Then on Friday, when the volume really picked up on the NASDAQ, the NASDAQ made very little progress. And we look at leading growth stocks, there were a handful that did very well after earnings, and others just kind of the market yawned and they started to just drift a little bit lower. So in this kind of market, you just got to be a little bit careful, meaning it's a terrible thing to try to call the top because that's a fool's game. However, one just needs to be careful what's going on. So at this point, you don't want to be chasing growth stocks. If stocks are extended, stay away from them. If they pull back gingerly into support levels, you might pick them up. At the same time, you might want to take some profits at this point as the market pulls back. Now, if you start losing money, starts getting hit hard, you might want to really start trimming down your positions because the market's been running very hot. And this is a busy week right now. We have a lot of earnings coming out of a lot of the growth stocks. The stocks have been leading the market. We have the Fed meeting where they'll announce probably no tapering on Wednesday, so that might be good for stocks. So this is a kind of week where you just might want to do nothing, just mind your positions. Stocks come in gingerly, you might want to try them off a support level. If they look like they start getting hit hard, you might want to start booking some profits or just getting out of stocks. As always, let price and volume be your guide. So it may be an interesting week, a tough week. Don't let the euphoria of all the indices hitting new highs fool you. Some technicians may argue that this broad-based rally is very good, and I'd have to agree with that. On the other hand, if you see too much of the defensive sectors rotating to the top, that also may not be that good for the market. And we saw that as we see utilities pretty much near their highs, and that was a laggard group. So just be careful, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor. Have a great trading week.